Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a short trade here on crude oil. Now, overall on crude oil, we've been kind of coming out of a little bit of a range here, but primarily all of this movement that we're seeing at the moment is coming on the back of that huge API movement that we had last night. Now, if we go back to yesterday's movement, you can see that massive spike higher. All they are doing right now is just coming back down on that movement. So that generally gives us an overall downside target of around that 49.82, but that 49.82 level, it may be a while until we get down there. So the first thing that I'm looking for is just to push back down for the lows. So my entry is going to be at 50.10. My stop is going to be at 50.20, and the overall objective right now is going to be down at 49.91. Now, I'd never like putting it directly on level, so I'm going to go above that to 93, and that's going to be where I'm looking to take my target. Now, the big reason behind this is we had this huge drive lower, and it's very likely that there are going to be a lot of sellers that maybe didn't want to take it right there. Maybe they missed it right there because it was so fast, and this is really the first obvious pullback that we've gotten for the sellers to take this back down. So the probability is very high that we see sellers jump back in on this now that we've seen some bearishness come back into the market to drive the market back down to that $50 level, as well as the support at 49.97 and back to the low of day. So that's kind of what I'm looking for at the moment, just waiting for a little bit of a drive further back down for the sellers who maybe missed this entire move lower. So all we have to do now is just wait for the sellers to come into the move, but the entry at 50.10, looking for the target at 49.93. Seeing the sellers, wow, look at that, all in one big move. The sellers pushing down into the lows, and we get the target filled. They got hung up a little bit here around that area of support at the big $50 level, as well as the support coming in at 49.97. But when they cracked through that, quick run right back down to the lows, and they hit an exact double bottom at 49.91. So just a beautiful breakdown, snap move right back down, and we got that target filled. Now, this is exactly why I don't like putting my targets on specific levels. Had I had my target directly on that level, probably wouldn't have been filled, and I may miss this, and it could just run all the way back up again. So that's why I front run. It's a really, really big reason, and I'm glad I can show that as an example, but that is precisely the reason I don't put prices or targets or really anything on exact levels unless I have a really good reason to. So overall, beautiful rundown. That's exactly what we were looking for. The sellers that missed the initial drive lower were able to jump in on this one and at least get something out of that move. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.